Good morning, our Neutral Voices listeners out there, and welcome to Financial Pillar. Once again, I'm your host, Ryan Leopard, and joining me on the set today are my friends from DR Financial, Chris Hanna.
Good morning.
Mark Ellington.
Good morning.
Mark, it's good to have you back. We missed you last week.
Good to be back. Good
Good.
to be back.
Awesome.
Vacation's always nice, but always too short.
Vacation, huh? Nice. So today is our third episode in our financial literacy series where we're going to be talking about credit, how important it is to our life, and get an understanding of the U.S. credit system. So I want to start off today, ask my friends from DR Financial. Chris, how important is credit to our financial foundation?
Well, I think credit is, like I said, a part of the foundation, or part of the picture of your overall financial picture that we all have. You know, we have money hopefully in our bank account. We're working a job to make income, but I think part of it is credit, because at some point we all hope to buy a house or buy a vehicle or buy something that is something that we feel like we need in our life, and credit becomes a part of that. So I think it's definitely a part of the picture that we should ignore, and probably one of the areas that some of us may not know really how it works. And I think it's why it's really important today to have that conversation so people can get that education, because for the most part, most parents, I don't think, talk about it. You're really never ever going to learn that in school too much, how to handle credit. So this might be one of the few places that somebody can really learn how credit can work, how it can be an advantage, and make sure you don't turn it into a disadvantage.
Absolutely. And that's why I thought this is one of the important topics to bring up in our financial literacy series, is to bring some understanding. Because I know, being in the banking business, I get questions all the time, from all ages, young, old, financially well off, doesn't matter. There is a lack of understanding around the credit system. There's also different beliefs when it comes to that. And, my personal belief is, we got to start young. Right, we got to start young, building our credit, understanding our credit, and also that's typically where I would probably say most people get in trouble, right, when they're young and make unwise choices when it comes to their credit, buying things they don't need to, putting on a credit card, not paying it off, getting in debt, and unfortunately, when you get bad credit like that, it sticks with you for a long period of time. It's difficult to recover and correct. It can be done, but it takes time to do so. So that's why I thought this was a pretty important topic. So today I hope to bring some information, to our audience out there, just around the credit system, credit scores, what goes into the, our credit bureaus, that type of stuff as well. So one thing you gentlemen have probably heard of a man out there by the name of Dave Ramsey, correct?
Yes.
Yep. So for our listeners out there that aren't familiar with Dave Ramsey, he's a very popular financial guy out there who has videos talking about his philosophies, typically around saving, which is great, and also, paying off and getting rid of debt, which can also be great. But I have a quote here that I want to share today from Dave Ramsey. There's no positive side to credit card use. Even if you pay the bill on time, you're not beating the system. Right. And that's one that I kind of disagree with. I would run into this all the time, being in the banking industry, where somebody say, hey, I follow Dave Ramsey. I don't use credit cards. I don't do this. And properly utilized, credit cards, credit is a positive, right? You can do so. So we're going to dive into some of that as well. So today, as far as our financial U.S. Credit system, there's three major credit bureaus that go into that. Chris, are you familiar with them?
Yes, a little bit. You got Experian, TransUnion, and
Equifax.
Equifax.
Let me help you out.
There you go. Thank you. Thank you.
So there's three major credit bureaus that go into our financial system. And what is, do we know the difference? Are these government entities, or what are the credit bureaus? What are those three?
I mean, in my general knowledge, they're the ones that help keep track of. They get reports from where we borrow credit from, and whether it's, did we pay on time, did we pay our bill in full, how long have we had credit, and I know there's a big formula that is all made up of what our credit score can become based upon all that.
Yep, absolutely. Mark, anything to add to that?
Well, all the companies are going to use one of those three to check out your credit if you're getting a loan, or so it's very essential.
Very, very good point. Yes. Depending on the type of loan that you're getting will dictate, the credit bureau that they're pulling and the area in which you're applying for a loan, because they're based, from my knowledge, one's on the West Coast, one's Midwest based, one's East Coast based. So kind of depending on where you live kind of dictates, which credit bureau, like local places, local financial institutions might report to. The larger ones are going to typically report to all three of them. But to my knowledge, they are independent entities. They're not government entities, contrary to popular belief, right? But these are the primary resources that financial institutions and other places use when looking at your credit, right? And when we talk about credit, what type of things go into our credit bureau? Do we know?
Have bill payment, wouldn't it? Is that what you're talking about?
Bill
Those
payments,
kind of
yeah.
things?
Like what kind of reports the credit bureau?
Yeah. Loans. I would think your current debt.
Current debt, yes. Yeah. So with what goes into the credit bureau, a lot of times I get questions about, oh, well, I pay my cell phone bill, or I pay my electric bill. That's helping build my credit. And that's a common misconception. So an easy way to think about what's going to report on your credit bureau to help build your credit score is somebody that's lent you money, i.e. a credit card, home loan, auto loan, something like that, where, a financial institution has lent you money on the agreement for you to repay them.
I think that's very important because until you and I had the conversation a few weeks ago about this a little bit, didn't realize that the only thing that really helps you build the credit score is by borrowing money only, either through your buying a car, using your credit card, paying on your house. Because people all the time will talk to me about, will pay my utility bill, pay my water bill, my phone bill. Does that help me build credit? And explain that a little bit, because you that enlightened me a little bit more, because I never really thought about that. It really doesn't build it.
It can only hurt it.
Only hurt it.
Right? Because those are utilities. That's a service that you're paying for. It's not money that you borrowed, right? So you're getting something for that. The only way it's going to hurt it is if you don't pay those bills, right? If you don't pay your electric bill, what's going to happen? It's going to go to collections. It's going to become a charge off. At that point is when they report that to your credit bureau, which is a negative on there. So you're never going to, your utilities, your cell phone bill, something that you're paying for a service for is not going to help you build or establish your credit. It can only hurt you if you do not pay it and it gets to a certain point where you have not paid it, it's delinquent, it now becomes a collection, charge off, judgments, things like that.
So does that mean it's still extremely important, obviously, to pay those bills every month?
Oh,
if you are short on money, better to pay those service utility bills each month, and if you have to not pay off your credit card and pay some interest, better to pay off the utilities rather than the credit card, then you're saying.
Correct. Absolutely. In my opinion, right? In my opinion,
in our opinion,
we got to prioritize the things in our life. Obviously, right. Electric, water, the things that we need at home to survive, our kids and everything like that is take priority. But that's, why having a credit card can come in for those hard times that you can kind of use the credit card to make this payment and then make payments throughout there. Used correctly and used wisely, I believe credit cards are great. They're great for building credit. Nowadays, especially with a credit card, you can get points and rewards, when using it. So for somebody that's utilizing the credit card, this is the ideal way. You use it, you pay it off in full each month. Most credit cards are going to pay you some sort of points or rewards where you're actually earning money to do so. And that's something I was going to touch on later with that quote that I mentioned from Dave Ramsey. When utilized properly, a credit card could be a good thing, right?
So what's the best way to start? I mean, obviously some people have credit cards and that kind of thing, but I'm thinking back to when I was 17, 18, 19, 20. The only thing I was experiencing with debt was, in my mind, was seeing my parents every once in a while use a credit card, but didn't really see them use it that often. Obviously at that age, you really don't understand a mortgage on your house or a car loan. You just see your parents show up, with a car, or all of a sudden you're moving, but you don't understand all the finance behind it. So I guess what's a good way for somebody that is trying to start out with having some credit? What's the best way to do that?
And I think to your question there, when you were mentioning your parents seeing them use a credit card periodically, times have changed, just like with everything else. So when our parents, when we were young, seeing them use it, there really wasn't a bonus, right? I don't believe they're paying points, rewards, and things like that for credit cards there. A credit card is usually looked at as, hey, if I need to pay a large bill I may not have the cash for, right? Then we're paying with the credit card because we can make payments over a period of time. That philosophy has kind of changed with the banks, the credit card companies now incentivizing you for using it. It now has another purpose. Once again, instead of utilizing my debit card or cash to pay for something where that money just come out of my bank, if I use my credit card to pay for something and then I take that money in my bank account and immediately apply, or when the bills do, apply that to the card, it's just like using my own cash, but I'm making money by doing so through those points rewards that they're incentivizing me for using that. Going back to your question about age-wise, I mean, that's going to be up to different opinions. My opinion is start young. I started when I was 18 years old. I think I told this story on the first episode. I went to IPFW my first day at college, and they were there and signed up for a credit card. Got a credit card, right? Went home, bought some stuff I probably didn't need, but I made the payments on that credit card, something with a small limit. But that was very instrumental, in my future financial well-being, because from there, that enabled me to get a car without having to have my parents co-sign or anything like that for me, because I had established some credit through this credit card within like a year or so. I can't remember how long. I bought my own car, financed it obviously. So now I have a couple loans. By the age of 22, I had a good job and I was able to buy a home. So at a very young age, I was able to get approved for a mortgage to buy my own home instead of wasting money renting. Right? When you're renting, we're just kind of throwing money away for that type of thing. We talked on this, I think the first episode maybe, where owning a home is key to our financial freedom, because we're putting money into something that's ours, something that has equity, something that, if we go to sell later, it's going to have value when we do that. But we got to get to that point. If we don't have credit established when we go to apply for that home loan, we're going to get declined. So it's a process. It takes time to do so. So my personal opinion is between the age of 18 to 22 is probably the key time period in our financial lives, because that's when we need to start establishing credit, whether it be through a credit card, if we can get approved for it. There's different methods through that as well. An auto loan, which we may have to have a parent co-sign, something like that to get approved for. But building up different lines of credit, therefore, when we go to get our major purchase in our financial foundation, which is a home, we can qualify for that. Yeah.
I had a different, I learned the hard way. You get married, you start out and, don't get in debt, pay cash for everything. Well, then all of a sudden I needed something that I didn't have the money saved up for, and did not have any credit, and found out I couldn't, really couldn't get anything. And so, asked somebody, how do you do it? And I had to go get a credit card and start to build some credit. I think we just needed a washing machine or something.
Yeah.
And at a very young age, but.
And from our times when we were kids, times have changed also.
Yeah.
It's a little bit more difficult to get approved for a credit card if you've never had a credit now.
Right.
So there's different tricks, to that, or I should say different advice that you can be given to
use
do
a better
that.
term than tricks.
Yeah, the different.
I don't want to come.
I don't like that term either. That's just what came out of my mouth there.
What tricks?
Yeah,
do you
but
have?
if we know how to do things. So, for instance, and I don't want to get too in depth on different ways on the show here. These are offline conversations I'd be happy to have with anybody or through our contact methods. But for instance, one of the big things I would advise to parents all the time when they would come into me is kids 18. You can add them to your credit card. Right, they can add them as an authorized user, and a lot of credit card companies will then in turn report to their credit bureau, or apply for a credit card or an auto loan. Right, if you have the means, I know everybody doesn't paying cash for a card. Get financing for that. Get a loan where you're co-signing for your kid, and it's helped building credit for them. So a year or two down the road. Now I know not everybody has that ability, but that also goes back to kind of the point of this show is bringing financial literacy, to our viewing audience so they can kind of make wise decisions with that. A lot of people don't have, their parents have made decisions that have affected their credit. They're not in a position where they can help their kids. But there's other things out there, that we can look at doing, one of which is a secured credit card, right, which a lot of companies offer. There's a difference between a secured credit card and a secured debit card. I'm not going to go into the details behind that at this moment. We may talk about that in a later episode, but there are different ways that you can start getting. So a lot of credit card companies, they have a student credit card or a college credit card if you're going to school, one that is geared towards somebody that doesn't have credit, that allows them to get a small limit, but start establishing the credit, proving themselves to the financial system.
And I think that'd be a good conversation because as a parent now, I really don't want to co-sign for a loan. So,
And that's a lot of parents.
right.
Don't.
So I would love to know either, in this episode or a future episode, what are those differences in that security credit card or some of those other options? Because, maybe I'd be more willing to put my $500 down on a security credit card for my child to get their card, or, it's a great way to teach discipline for your child to say, hey, you're saving money and you got some money. Why don't you put it down? We'll get you a security credit card first, help you build your credit score. It's all discipline. And that's one thing about finances in the end. It's always about discipline. Even like we were talking about last week about bank fees, we sit there and go, oh, I don't want to get hit by bank fees and all that kind of stuff. But if you really sit back on, this is what I did, I talked about later, was I looked at it and go, it was really just teaching me discipline to keep enough money in my checking account, to not go overdraft at an ATM, to not go to ATMs outside of my bank that are going to charge me fees. It's all discipline. It's not somebody trying to take my money.
Correct.
So your whole financial picture is all about discipline. Even when you borrow a credit, it's about discipline. And I obviously for most of us, discipline is hard.
Everything with credit is about discipline. So I would talk with the especially younger people, 18, 19 years old, about that all the time. We would have conversations around credit cards. Credit card can be great, as I mentioned earlier, if wisely utilized, but you know yourself better than I do, right? We're just meeting for the first time, or we know each other from a business standpoint, but if you know yourself and you know you're not disciplined, it's not the right thing for you, right? Because what's worse than getting the credit card is having that debt out there, right? Mm-hmm. You may be paying interest, that's okay. But if you're not making the payment, you're starting off in the negative, and that's what we want to avoid. So we all have to be responsible for our choices, and we all have to be make wise decisions with that. And if we start out making unwise decisions when we're young, as I mentioned earlier, it's difficult to get away from as we get older.
And as a person dealing with people's finances, I think maybe one idea might be, if you're going to start with that credit card and you are scared you're going to put too much on the credit card, not pay it off and pay interest, or not handle it well in a disciplined way, is maybe only use that credit card to buy certain things. Mm-hmm. Maybe you only use it to put gas in your car.
Correct.
And not going out to eat, not going out on Friday night. Maybe you can use it for certain things, so that way you can control it, and it's money you can put gas in your car anyway. So what's the difference between
Correct.
your checking account, debit account, paying cash, or put on the credit card?
That's exactly how I would talk with my clients when we would do that is, don't use it for stuff you don't need. Don't go out and buy, a speaker system like I did when I was 18 years old. You need groceries, you need gas, use it for that specific need.
But you didn't need that speaker system for your first date? Or?
Well, I thought I did, and I still might want it again. I really, really do. But my wife won't let me get one, and I probably wouldn't be able to utilize it as much with my kids in the car. But yeah, I loved it. But like I said, I didn't need it, I did it. But that's not what I recommend to others. It's you have needs, gas, groceries, whatever it is, use the credit card for that and that only. That starts your discipline. But you have to be disciplined when using it to build your credit.
Right, and that leads kind of into the conversation about maybe rewards that you can get out of that, because I know there's certain credit cards, if you use at grocery stores or gas stations, you get extra points or money back. And so that'd be a great way to be disciplined, and say, hey, I'm only going to use this for the items that I get extra points on, not for, again, going out for the weekend.
Real quick, because there's definitely some information, because once again, the conversation is going by really, really quickly here. I think we only got about 10 minutes or so. So there's definitely information I want to make sure we get out there around the credit bureaus, credit scores, and things like that. So things that go into your credit bureau, I think I asked that question earlier, bill payments, loans, bankruptcy history, things like that can sway your credit score. But also, how is our credit score determined? Okay, so that's a question I get a lot of times too. So there is, our payment history. When we're making payments on these loans, that is affecting. I think in these, I'm not going to go into percentages, but if you look it up online, there's little grids out there that kind of tell you how much weight each category is put on. And going back to the three credit bureaus, Experian, TransUnion, and Equifax, they are three separate entities. So they all kind of factor them a little bit differently. I think it's all the, same methods, right? They're taking the same things into consideration. They just weigh them maybe a little bit differently to my knowledge. But your credit score is going to vary from one place to the other. Okay, so it's not going to be the same credit score for all three of them. It will vary because there are three separate entities. When we're applying for loans, a lot of loans, like an auto loan, something like that, typically the lender, the financial institution is going to pull like one of those credit bureaus. Some may pull a specific one, some it may be random. But when we go for bigger things like our house, right? If we go to get a home loan, they're going to pull all three of your credit bureaus, and they're going to typically use like the middle score. Okay. Now there's other caveats to that, depending on if there's multiple borrowers and whose score they're using and stuff like that, that I'm not going to go in depth on right now. But that's an understanding of our credit bureau, who's pulling it, what's being used. But what goes into that is our payment history. With that, we also have amounts owed. And by that, I mean, if you have a line of credit for $1,000, how much do you owe on that line of credit, right? They take into consideration all the credit that's been extended to you and what the percentage of that is being utilized. That also has an effect on it. The more that's being utilized, the more of an effect it can have on your credit score, bringing it down, right? The less that's utilized, the better it can be, right? Because you're not using all that credit that's extended to you. We also have length of credit history. So when we're talking about young people starting off, right? It takes time to build your credit. So having a credit card, right? That's not the end of it. We want to get something else because typically, to my knowledge from being in the financial services industry, I was in the mortgage industry for the early part of my career. And what I've learned through that is typically a credit bureau wants to see at least 3 trade lines, right? 3 trade lines at all times. Trade line is different lines of credit that's been extended to you, credit card, home loan, auto loan, something like that, right? So, but it takes time to get up to that level. And then the longer you've had those things, the better it's helping your credit. So somebody like myself who's had a long history of credit, me having a credit card, for 6 years is going to help my credit score more than somebody that's had a credit score card for 6 months, right? So length of history goes into that as well. And then new credit, which we typically think of the term inquiries. An inquiry is when you apply for a new line of credit, somebody has pulled your credit. That affects your credit by showing how many new lines you've opened recently. The more new lines you've opened recently, it can bring that down. Okay. So a lot of people worry about, well, is my credit going to be pulled, right? Is my credit going to be pulled? So is that going to detract from my credit score? That's what they mean by new credit. We call it inquiries. Oh. And then also a credit mix, the types of credit you have. If you got 4 credit cards, that's all one type of credit. But do we have a home loan? Do we have an auto loan? Do we have a credit card? There's a mixture.
And I think if you already do have a credit card, you may hear Ryan talking today and go, gee, it's hard to remember all those things. Mm-hmm. I know most of the credit card companies, when you go online and you have an account, they give you all those different categories of what affects your credit score and even allow you a lot of times to do what if scenarios. What if I paid this down, or what if different things I can do to increase my score or could hurt my score. So don't worry, if you're listening today and you're like, I'm not going to remember everything Ryan said and what mixes in that, if you have a credit card, go online, take that extra time to kind of figure out how that credit works. And I think most of the credit card companies are very helpful in helping people learn that. So what's a good credit score? Which credit score should I try to attain?
Good question. I want to go back to something you just said there also is just a disclaimer. I am not a credit professional by any means. The information I have is through my own personal knowledge, throughout the years, and also through my history in the financial services industry, through mortgages, the bank, and things like that. So these are just tidbits that I've picked up through there. But there's absolutely official ways that you can go through. A lot of our banks nowadays, if you have a bank account with them, they have some sort of like credit reporting system that you can get through your online banking, right? These are not specific. You'll get a credit score on there, but these are some sort of generated ones. It's not necessarily going to align exactly with your credit bureau, but it's information they've compiled from one of the credit bureaus or multiple credit bureaus on there. But a lot of them will have that type of thing. You can go in there and put what ifs. What if I paid this off? What if I did that? And it'll kind of give you an idea of what kind of impact, good or bad, it can have on your credit if you did that. But the credit score wise, that's a question I would get all the time at the bank as well. A credit score can range anywhere from 300 to 850. Right. And people are so fixated on, I want that 850. I want that 850. But really, the question is not, what is a good credit score? It's how can my credit score affect me in other ways, right? It affects you from getting loans. But also, I just had this conversation with my son, who's now 17-year-old and on the road, and we talked about insurance, right? And there's a lot of factors that go into your insurance doesn't report to your credit bureau, but insurance, when you go to get an apartment, when you go to get a job, these places all pull your credit bureau or credit score. Okay. When they do that, they're looking to see basically your credit score is telling a story of you and how responsible you are. So to an insurance company, if you got a low credit score, you're going to pay more, right? If your credit score is low and you go to get a loan, you're probably going to pay a higher interest rate. So we also have to understand that as well, is that credit scores can determine, it can be costly to not have good credit. Not only will you not get approved, but it will be costly. But going into just relaying some information of where you can find this, relaying information to where you can find other information on this is search out Equifax, TransUnion, Experian. Once again, those are the 3 credit bureaus out there that we talked about today. We have that information or the names in the description for the videos. Also, you can obtain the U.S. government has a law that passed that every U.S. consumer can get a copy of their credit bureau from each one of the 3 entities once a year for free. Okay. The place that they recommend that you would do that, it's the only official site, is annualcreditreport.com. You can go there and get a copy of your credit bureau for free once every 12 months. I think there's a little caveat in there with COVID of you might be able to get it a little bit sooner. But that is also in our description of where to find that. You can call in, write in, or look at the website if you have that ability to do so. But when you do that, they're only providing you a copy of your credit bureau so you can see what's on there, right? What's showing on there. It doesn't necessarily give you your score. You have the ability to get your score, but they typically charge you for that. There's other third parties out there that I'm sure most of you have heard of, or you can search out. I'm not going to promote any of them. Just be careful if you are looking at those third-party websites, because sometimes they come with little catches. Sign up, get a copy of your credit report today, and next thing you know, you see a $1.99 monthly fee on there. Right?
And I think that's a great thing is that today there is a lot of education on credit that maybe 10 or 15 years we didn't have. It's on our fingertips. You can go on the internet and find that. So take that discipline that you're going to use on your credit card. Take a little time, go on the internet, learn about credit with that same discipline.
Absolutely. So we're coming up on our time here today. Once again, thank you for joining us. I hope you found some information that might be helpful to you credit-wise. I hope to come back on maybe another episode and touch on a little bit more in depth on this, but just wanted to get out that information on where to look. Equifax, TransUnion, Experian to get that information. Annualcreditreport.com if you want to get a copy of that credit bureau. And once again, if you have questions that maybe we didn't answer or you'd like to see us answer, feel free to write in, comment in the videos below, seek us out, and we'll hopefully address those at some other point in time. But thank you for joining us today. Tune in next week, same time, Wednesday, 8:30 a.m., and our topic is going to be over savings and budgeting. Thank you again, our Neutral Voices. Peace.